So it's been a while since we've talked about penny stocks. As you know from my last penny stocks update videos, I was saying that this is not the current market landscape to trade penny stocks. And although I get asked incessantly day after day, when are you going to release your next top penny stocks video? I don't feel right doing it if I don't think it is the right landscape to trade penny stocks. I'll be honest with you guys. However, that does not mean that if I do see an opportunity on a certain penny stock, especially one that we've tracked for a while, that I won't bring it to your guys' attention. So in this video, I will be talking about the one penny stock that I'm currently eyeing that could easily double as a long-term investment and potentially triple based on our discounted cash flow models. There's also a potential short-term opportunity with this penny stock as there is a PDUFA date coming up. And yes, if you guessed that the stock was in the pharmaceutical realm, you'd be right. In the video, I'll describe what that is. It has to do with FDA approval. But let me start off by saying welcome back to the Traveling Trader. My name is Z. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of this penny stock. And without further ado, let's get right into it. So the penny stock that I'm talking about is, of course, SESN or Sesen Bio. This is a penny stock that we got into when it was in the $1 range, currently trading at $2.45. Now, I'll be honest, I have swing traded this stock. As I've been doing with most penny stocks, I've had stop limits on everything risky. I've talked about this ad nauseum, but I really believe that this is not the landscape for penny stocks and for risky stocks because the market is looking for value and growth. And when I say growth, I don't even mean hyper growth. I mean traditional growth like Apple, Microsoft, etc. That's another story for another video. SESN currently sits at the 100-day moving average at $2.45. Now, it does have a PDUFA date coming up on August 18th. What is a PDUFA date, you ask? Well, if you guys have been tracking my updates over the course of the last few months with Sesen Bio, you'll know that they have a drug in the works called Vicinium, which is waiting for FDA approval. And PDUFA date is the date that the FDA must review the new drug applications. It's a deadline, basically. It stands for the Prescription Drug Free User Act, and it typically calls for a period of 10 months to review these applications, although drugs that are deemed a priority actually have a shortened length, which is 6 months, just like Vicinium. You could see here on Sesen Bio's website on February 16, 2021, that the FDA did accept priority review for Vicinium. Now, I promised to get to the trades within the end of the video, but I want to give you my DD, both from a fundamental and a technical standpoint. Without getting too much into the drug details, obviously you can review this on your own, but Vicinium aims to target two different cancer types, and it is considered a revolutionary drug, meaning it aims to do what drugs on the market currently don't do. Now, not only that, but the main reason that it actually got accepted for priority review was because of the results of the trials. So as it relates to non-muscle invasive bladder cancer, you could see here that overall, if you include both responder and non-responder groups, 76% of patients that receive Vicinium treatment remain cystectomy free 3 years from the start of treatment. In addition, 96% of Vicinium treated patients were progression free at 12 months and 90% were still progression free at 24 months. Now, obviously, I'm not a doctor, I'm not an oncologist, but those look like promising results to me when compared to some of the other drugs that are currently on the market. Again, I'm certainly not an expert. I'm just reading this from a market perspective based on the data that is already released. What's more promising than that is there is a similar drug that was approved called Keytruda. And if you compare the results between Keytruda and Vicinium, you could see that they are similar if Vicinium actually has a slight edge in the categories that they measured. So the thinking there based on this analyst article is that if Keytruda was already approved by the FDA, then based on these numbers alone, there is no reason to believe that Vicinium won't be approved in August. One other thing to point out, they don't actually have to wait until August 18th. They could do it anytime before. August 18th is just the deadline for the PDUFA date. Now, here's where some of the financials come in, and obviously we're plugging some of these numbers into the discounted cash flow model. But if you take a look at the peak year revenue opportunity for Vicinium, there is quite a wide range. But in Europe, US, MENA, China, rest of Asia, you could see it broken down by region. But you can see the total of the peak year revenue opportunity for Vicinium is between 1.39 billion and 3.47 billion per year. Now, this is a long-term projection after 2022 because different regions will have different requirements for review. Now, here is the DCF model, or discounted cash flow model. And these aren't my numbers. This is from the article in Seeking Alpha. But I agree with these numbers based on the data that we currently have. And they're factoring in 10 years of future cash flows. Now, I've talked about DCF models before, but basically it is one of the tried and true ways of evaluating companies by taking its projected cash flows and discounting them to what they would be valued today, because the discounted cash flow model states that cash flows in the future are worth less than cash flows today due to inflation, as well as the fact that money today can be invested. So money today is actually worth more than money in the future. Anyway, but the DCF model, as you see here, the middle one in the yellow, this is the base case for Sesson. And you could see that based on that, the current fair value per share is $6.94. The middle case is what we call the base. Below that, we have two bearish cases and two bullish cases above that. The variables that differ among the different cases are either the market size, as you see here, or the average Vicinium yearly cost per patient. So as we stated, Sesson is currently trading at $2, around $2.48 currently, sitting at the 100-day moving average, a level that it bounced from going all the way back to July 20th. It always bounces off the 100-day moving average. Now, trend is your friend until the end. So obviously this trend could be broken at some point, but for now, the 100-day moving average is very important. So with that said, even the next bearish case below the base factors in a current fair value per share at $4.47. Like I said, it's currently trading at $2.48. So you really have to go to the ultimate bear case to factor in a price that's less than what it's currently trading. By this model, that would make Sesson actually undervalued. Now, of course, the ultra bull case means that Sesson can actually 4x from here, and the base case is a more than 2x proposition. Now, before I get into the short-term and long-term trades, because this is going to come with a caveat, as I said, this is not the market for penny stocks, I believe. I don't think it is the market for penny stocks. I don't even think it's the market for hyper growth stocks that we've seen people get killed on recently. So I will have a caveat in here in the form of portfolio distribution and stop limits, but we'll get into that when we talk about the trades. I just want to talk about the risks first. So the risk is that I think Sesson will have to do another offering soon because, as this article points out, their balance sheet does not support them burning cash for the next 2 years at the rate that they've been doing it. Also, as this article points out, there's nothing particularly noteworthy in terms of institutional and insider ownership, not yet at least. So there is definitely some risk here. And obviously there is risk that the FDA says no, right? There's a risk there, and in which case the price could actually tank, and probably will tank if that's the case. So keep that in mind. All right. So with that said, how would I go about trading it? As I said, I've already been in Sesson since it was $1 something. However, right now sitting at the 100-day moving average, I like buying things as support because you could set a stop limit not that far below where you enter, right? So you could set a stop limit, give yourself a little bit of cushion, set it at around $2.10 maybe, in case things go awry. Portfolio distribution is also important. People hear about opportunities like this and want to hit a home run. So they put 30, 40, 50% of their portfolio in a very risky stock. I'm of the belief that you should always work towards building a quality long-term portfolio and only isolating a very small percentage of your portfolio to risky plays like this. This should not be most of your portfolio. Obviously, do what you will. This is just my opinion. Take it for what you will. I'm just giving that caveat there that, just because of all of these bullish things that I talked about might become true does not mean that this should be the bulk of your portfolio. Doesn't mean that you should just let this bleed forever. No, if you took a certain small percentage of your portfolio, like 1% or less, and said, I'm not even going to set a stop limit, I'm going to let it ride until we get to August 18th or before, fine. But, if you do have a significant position, I would say, again, in this market, you cannot be too careful. I would set a stop limit and obviously keep up to date on the news. If they do not get that FDA approval, then I would not dollar cost average here. I would not average down. I would not buy more. No, it is a done deal that this trade is gone, in my opinion, right? Because companies like this, part of the reason that they're penny stocks is because they are banking on future growth and they need to get lucky in the future in order for them to grow into flourishing mid cap or large cap companies. So I would set a stop limit at 210. You could set it at $2 depending on your risk tolerance and how much cushion you want to give it. But those are my warnings. But in terms of a price target, you have to target first form a resistance, right? That's how we do it in technical analysis. So around $3, there's resistance. There's also resistance around $3.40. And then we go to the discounted cash flow model where we can project future prices. The bear case puts a long-term price at $4.47 if the FDA approval goes through. The base case is around $6.94. The next bullish case is $8.55. You can use all of these as price targets depending on the time horizon that you want to take for this trade. Anyway, traders, I hope that was helpful, not only with regards to Sessin specifically, but just how to view trades in general, how to view trades from a fundamental technical perspective and marry those two together to make better decisions. Portfolio distribution, stop limits, etc. All these things are very important. Trading is a forever learning game. It's not something that you learn once and then you're a boss at it forever. Every single day, I'm learning new things trading, and I've been trading for almost 2 decades now. So go figure. Anyway, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of Sessin, whether you're getting in it, whether you're going to pass on the opportunity. I love hearing from you guys regardless. If you want access to all of our trades, link is in the description below. So sign up where we also do live streams. We just did a live stream this morning. So if you want to engage with us on options, crypto, stocks, trades, etc., long-term, short-term, how to build a portfolio, all of that jazz, link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.